All right, good evening, and today is September 7th, 2023. It's a Thursday, and it's a third trading day of this week, and this week we only have 4 trading day. Let me close this one. So we don't have trade on Monday, we only trade Tuesday, Wednesday, and Thursday. I mean, yeah, Tuesday, Wednesday, Thursday, and Friday. So let's look at the trade that we saw. Okay, the first thing we draw in the morning when we saw that right here, we see that the market structure shift, right? And we see the bullish breaker right here. I mean the bearish breaker, and then we have a bullish breaker right here. And we saw it go down and retest that right there. So we should have take the trade around here. 1, 2, 3. So that three opportunities to get in right there. And it's a very low and easy trade right there. Low risk right there, and that's our goal right there. Just take very low, easy trade right there. It takes a lot of practice, and we're not there yet, but that's our goal right there. So that's the first trade region, and then we go in here, right? We check a trade right here. Okay, let me see. Hold on. Okay, so we did check a trade right here, a real trade we check right here. Let me hold on. Okay, so we're going right here with the idea that we saw this fair gap right, I mean order block, and there's implied fair gap right here. And after it take the sell salary, so we think that's a good position, and we thought it's just another retest, and then it will go up. However, it did not do so. It kept build more sales buy salary. It dropped more buy side liquidity, and then boom, the last minute it take the sell side liquidity, and then boom, it's go. So look back at this trade, I think we did just fine. I mean, we reached 30. How much we reached? Yeah, we reached 33 cents right there, and we anticipate it's gonna check this buy side liquidity, and it did. And let's see, so we going around here, and yeah, we reach 30 cents for $1, so it's 1 to 4 ratio right there first, right there. So I think we do it just fine, but I remember in my mind when it took it to, I think it would be better if we go down and take the sell side liquidity. Exactly, if that happened. And I think when we are about to finish the recording for the first hour, I say, okay, if we want to go long, then this is the perfect time to go long. And exactly that what happened. And anyway, we only trade one trade. That's our rule right now. So we just keep the rule right now. So we cannot go in right there. So that's the lesson learned first. Even though it's a not successful trade, but we learn a great deal. Right here, we learned that our stop loss too tight right there. We have to wait for the buy side we were taken. And I think we put right here the perfect time entry for this trade is at 10:34. That's the best one. because we have what? We have a sell side liquidity was rated, right? Yeah, when we enter the trade right here, we have a little bit sell side right here, but the good one is right there at a, this one at A55 right there. So you have a sell side liquidity rated, and then you have a huge amount of buy side liquidity or drop. That's the reason why when it go up, it explode right there. You look at that explodes move, huge explodes move. That's the liquidity phenomenal right there. We see it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. I mean 12 up close candle in a row. That's a huge explosion. So the lesson learned for it is that whenever we see the market structure shift, wait for its retest. Better than we better if it retests and take the sell side liquidity of the swing low where the market structure was shift. All right, in this case you see the market structure shift, right? It make low, 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 and all of a sudden from here it make a high low. You see that high low right there? So it's drop all this sell side liquidity and boom, go down, take it, but it reached back this order block and then it's, you know, boom, going up. It fill in this gap right here, but it not take the buy side, just fill the gap right here, and then it is retracement down. And when it's retracement down, we saw the opportunity. We saw, okay, there's a bullish breaker and inline fellow gap. So what we saw that retest, then we go in, but we got stop out the next minute after that, which is good. Yeah, right? It's play out when you wrong. You want to run fast, so you can get out of trade fast, and your stop loss is help you right there, so you lost. But if this case work it out, you can get you know, the 1-to-4 risk reward ratio right there. So basically we execute the trade fine. I mean, next time if it show up like this, we have reason to wait a little bit longer. In this case, wait until after 10:30 something, you know, to take the long trade. And also, you know, the first 1 hour or so, it kind of choppy. You see that, up, down, and then circle up again. So that is the very valuable lesson we learn right there. I think it's kind of fascinating to see how they trap the buy side liquidity and then boom, it explode. That's amazing. So let's see what is the low of this one. So the low of this one is 79, and then you see 75. So 4 cents below that. So if we put our stop loss 5 cents below here, right, we in the trade. 75, right, we put 74. Hold on. So yeah, 74, because the low of this one is 79. 79 subtract 5 cents, 74. Our rule is that we do 5 cents below the swing low order block. So if we are, you know, faithful into that principle, we still in the trade right there. If either we go right here, we go in right here, or we're going right here. Even though we go right here, right, we go in at 87. Want to see how much we go in at 87. Wow. No, we go in 440.20. Yeah, up here 20. Okay, then if we reach right here, see how big our stop loss gonna be. 46 cents, still good. I think we should keep the stop loss wider, right? We have 46 cents to make our requirement. Our requirement that that we don't want to reach any trade that more than 50 cents. So that's our rule right there. So in this case, 46 cents is still good. So we should make stop loss a little bit wider if we go early, right? If we going early right here, we should give, you know, a little bit room for it to run, a little bit room to breathe right there. So yeah, let's take this screenshot, right? So what we are trying to say right here is stop loss should be at 442.74, which is 5 cents below the swing low, the prior swing low. Okay, yeah, it's perfectly, you see the stop loss should be there. Then we still in the trade right there. Then we have a chance to, you know, to ride the market up right there. So we put right here stop that too tight, the better stop loss is 5 cents below the prior swing low, right? What I will learn from this, you know, unsuccessful trade right here? Yeah, I mean the long trade idea is correct. We give y'all the credit right there, but the entry but the entry but we can call it early entry, right? Early entry and or stop loss is too tight. Well, if we're going early, then we have to keep the bigger stop loss. Otherwise, we have to patient wait for the right moment. So we create a very low risk trade, and that's the easy trade. We are aiming right there. Okay, so what else we learn from this trade is beautiful and setup. If we know exactly where to going, we saw the liquidity price that we were trapped right there. Yeah, I think another thing we see that we have to make sure when it make a retracement, let it check out this buy sell liquidity one more time. But however, it check one more time, sell liquidity before it's exploding right there. Wow, that's wonderful. Okay, after that, do we see any opportunity, right? We can see right here, right? This is a retest of this order block. If you want, you see that this is a swing low, the retracement right there. Yeah, okay, one more thing I want to point out right here. So our question, why it stop around this and it reverse to go back? Why? Because it check out the sell side liquidity from 1 hour time frame right there. So that's the reason why it just it's not gonna go further down. It's like limit down, right? Like look at a 1 hour time frame, we can see the reason. Where is our 1 hour time frame? Okay, right here. All right, before the market, we already draw this liquidity. We know that if it's going down, then we're gonna take out that liquidity, and it did, and then it bounced back from there. That is our sell side liquidity. And it's coincident with around this, you can call this a order block right here. This order block right here, and then huge further gap, and now it just retest that order block. So basically, the long setup for 1 hour time frame is to play out right now. So if you are long, then you can go in long right here because it's a bullish order block right here. The bullish order block, it can be many candle, not necessarily one candle, right? And then you have few further gap, and then all of a sudden it now go down, it retest that. So that coincidence right here around this area, it gives us the reason to go long here, right? It gives us a logic to go long, especially after it take the buy side with sell side liquidity. That's beautiful, setup right there for to go long. Okay, now look at we did identify the diversion on the smart money diversion technique. Right here, right? Let's remove some of it right here. Too much. So we see, wow, you see at this 10:30, yes, 10:30 we see that QQ make a higher low, but this one make a lower low. That gives us the diversion right there after I make the low. So basically the QQQ make the low first, and then the SPY make a low. Let's see if we can come up with any logic here to give us, another confluence why we need to go long at 10:30. Yeah, we can say that we go long at 10:30 because the QQQ make a high low and the SPY make a lower low, but it's just a liquidity, rated right there, not really. It's very long wick right there. So that give it a reason to go long. Let's take this screenshot. So let's see. So we said 9:30. No, 10:30. We have the QQQ make a high low, but the SPY make a lower low. Smart money diversion at 10:30. QQQ high low. Lower low. That's where the 10:30 happened right here. 10:30. Yep. Around this time on the 1 minute time frame. Okay, so look at this very interesting right here, right? We write down our observation, right? We saw sub move down to run low, and at 9:30 we see a diversion, and then you see it make a low low and it make a high high, and give us an idea it's gonna go up. But for the SPY, the 1 hour later it make another diversion, and the SPY in this time make a low low before they go up right there. Just 1 hour. And another thing that, when we trade on Thursday, we want to see if Thursday is a reversal, right? Is where the last 2-3 days, in this case we only have Tuesday and Wednesday, but if we have Monday, then last 3 days going down, and then Thursday it start reversal. Let's look in our journal to see if we catch the move on a Thursday reversal. We see any pattern that's similar that we may miss. Okay, let's see. Let me look at that real quick. I see only anything. Okay, I think we saw something here. Yeah, for something here is a reversal twisted long. Let's see what in here. Order block, reversal. This is the pre-market hour. Okay. Okay, let's see what do we have right here. Asian low was taken. Oh, we don't. I want to see the time that it after at the open. Let's see. Yeah, this is the ES. It's the ES, you know. It's like a future for a spike. But anyway, we see the pattern, right? Whenever we see the market structure shift in this case, you see it start make a high low, then you draw the one that the last swing low and wait for it to retest that area, then you can go long. Right? In this case is right here. Last swing low before it go up and wait for this retested area, and it did retest. Then we can go long. Yep. All right. Let's look, see where we go from here. We have about 2 more minutes left, so I want to look at the 4-hour time frame. So you see that the buy setup is taken right here. So if the long setup, which is a breaker right here, then let's see if the long setup will play out. If play out, then it's gonna be what? You have a short setup right here, right? Boom, displacement fatal gap. So let's see if it's gonna retest the fatal gap, or this just a retracement, right? You still have the auto block fatal gap right here, and it retests this level. If tomorrow this level, right? If tomorrow this level is got break, right? Then we know that it's gonna be bullish right there. However, if tomorrow it fell, it tests retest, but it fails breakthrough, then it may continue that downtrend right there. You see, it's just a down move and retracement, and then down move, retracement, and down move right there. So that's our thought for now, where the market gonna head into. If we break this level, then we think that it's gonna be the reverse retracement right here gonna turn into a reversal and gonna go back up. Otherwise, it will continue to go down. All right. Anyway, I think we run out of time, and talk to you later. Thank you for now. Bye for now. Bye bye.